Two major pieces of big news for Bitcoin today, one being from Blackrock and the other one from the state of Texas. In today's video, I'm going to break down what are the pieces of news that have just happened and what does it mean for Bitcoin price. And here's a hint, of course, as always, price is probably going up from Bitcoin. We're going to talk about a $1.7 million Bitcoin, which is roughly a 17x from today, where Bitcoin price is just about $100,000 dollars US. We're going to talk about Ray Dalio. We're going to talk about BlackRock. And like I said, we're going to talk about the state of Texas, all three of these things and more. But real quick, before we get into that, I want to share something that I've not promoted too much, but I want to make it very clear, well known for everyone. There are Bitcoin Christmas parties coming up here. If you are in the Midwest, here in the United States, in Michigan, or in Indiana, there are Bitcoin parties happening as just thanks for the season and celebrations of 100K. I think these are going to be awesome times to hang out and network with Bitcoiners. There's one coming up on December 14th in Ann Arbor, Michigan, one on December 18th in Indianapolis, Indiana, and one on December 27th just outside of Lansing, Michigan. All these events are free. You do not have to pay to go to these events. Please text the phone number on your screen here and let me know which event you have an interest in joining. And I'd be more than happy to have you there. Hang out, we can chat, we can do Bitcoin workshops, we can talk about Bitcoin custody stuff, multi-sig stuff, estate planning stuff, Bitcoin price go up, just conversation, meet people, make new friends, celebrate, the Christmas season, celebrate $100,000 Bitcoin, all that wonderful stuff. So if you have that interest, please text me, reach out, because those are coming up really quick here in the month of December. But without further ado, let's get back to the first announcement from BlackRock. So Joe Burnett, who's a friend of mine and one of the early believers in my content, big shout out. Thank you, Joe. Appreciate all the work that you're doing in the space. As Joe accurately comments here, if the average portfolio soon contained 2% Bitcoin and 2% Bitcoin allocation and total global wealth is approximately $900 trillion, which is correct, then Bitcoin would soon become an $18 trillion asset, which is roughly 2% worth of global assets, which is just about $860,000 per coin. Now, why is Joe commenting on 2% for Bitcoin here? Well, he's commenting on commentary from Michael Saylor, who's having commentary from BlackRock about how BlackRock themselves is now saying up to a 2% allocation in Bitcoin is quote unquote a reasonable range. Now, a lot of people for years within BlackRock's internal structure have been talking about a 30%, 40%. One of them even talked about an 80% allocation being not too absurd to Bitcoin. But granted, those came from internal BlackRock people themselves and not from the institution itself. This is actually coming from the institution itself. So even though it's not a large percentage compared to what some of the people within the company have been saying before, with their own personal opinions, this is different because it's coming straight from BlackRock. Okay, you can read the whole article here. You can go to Michael Saylor's page. You can read it. It's a new article that came out on Bloomberg. Okay, you can read the full article here. Giving Bitcoin a 1 to 2% weighting, which again would be $18 trillion with the global asset allocation. To me, this is very much in line with what we've been hearing from other hard money advocates, right? Many of you watching know of Ray Dalio and know of the work that he's done, right? He's one of the guys that's talking about this 500-year cycle and all those kinds of things, right? It's very inspirational work to a lot of people in Bitcoin or the hard money space in general, and he is the most successful hedge fund manager in modern history. So a lot of people really respect what he's saying. And what he's saying, of course, is that he prefers investing in things like gold and Bitcoin, hard money, than debt assets. It's very simple. Nations have been building up a lot of debt since World War II. We have a lot of paper that's been built up in the system, and we have demographics that are really in trouble. We have an aging older population. We have a young generation that's not being as economically productive as they have been in previous generations, meaning this debt burden only expands and grows for these countries, and it's simple supply and demand. There, in the next 20 years or so, is going to be a massive wave of supply of these paper instruments, especially bonds, government bonds, and there's just not going to be as much demand for them compared to things like gold, which are relatively finite, and things like Bitcoin, which are absolutely finite, both of which take immense amounts of energy to create versus something that takes much less energy to create. It takes a lot less energy to create a promise than it does to spend electricity to create Bitcoin or to convert dirt, actual physical dirt, into gold, right? You can think of Bitcoin and gold in analogous terms there, right? Basically, the reason gold is valuable is that you are turning raw dirt into condensed energy, which is that yellow metal. Or like with Bitcoin, you're taking electricity and you're condensing it into via prime numbers and elliptic curves into a portion of an algorithm that computers use, right? You can think of both things in the same way. You're taking the abstract energy and condensing it into something that is fungible, something that you can actually transact. So to Ray Dalio's point and to Blackrock's point here and to Michael Saylor's commentary and Joe Burnett's commentary, let's do some actual math here of what this look like. So global wealth at the time of recording is $900 trillion. Let's say it takes a long time to get to this 2% allocation. Okay, let's say it takes 10 years. Okay, 10 years I think is probably reasonable, right? Bitcoin has gone from nothing to something very quickly over the last 15 years. Let's say it takes yet another decade to get to a mere 2% global allocation. Now, that would mean, again, going off Joe's analysis, and I verified the math myself, that would be about $860,000 Bitcoin in 2024 purchasing power, in 2020, late 2024, early 2025 USD purchasing power. Now, of course, we're going to be printing more dollars over the next 10 years or so, right? Just like how Ray Dalio has described that we're going to be creating more and more debt assets, and it is almost uncertainty. It is almost a certainty that these unprecedented levels will continue, and that it is impossible for these countries, including the United States, to be able not to have a debt crisis in the years ahead, resulting in a great decline of monetary value, right? We are going to keep printing money. We've been printing money for decades. We're going to keep doing that. There's no reason to think that it's going to stop. If anything, it's going to accelerate as these debt burdens only grow and balloon. So the point is, the historical trend for US dollar debasement is roughly 7%. A lot of people don't realize that, because the official CPI inflation rate is 2%, but the actual debasement rate for US dollars is approximately 7%. If this continues for the period of time at which it takes for Bitcoin to grow into a 2% asset, which is 10 years, that would mean that we would create 96% more dollars. That means that almost exactly we would double the number of US dollars in existence, right? If you look at any chart of the dollar history from 1779 all the way out to today in 2024, you see it's perpetually an exponential chart that keeps growing and growing and growing. At one point in the distant past, the entire national debt of the United States was $50 million. We bought Alaska for a couple $1,000,000. We bought the Louisiana Purchase for the low 8-digit purchase, right? I think it was like $10 to $15 million. Somebody can fact check me with that, right? But my point is that we've gone from millions to tens of millions, hundreds of millions, billions, tens of billions, hundreds of billions, trillions. Now we're in the tens of trillions. Before we know it, in about a decade or so, we're going to be talking in terms of hundreds of trillions of dollars, no longer just in terms of tens of trillions of dollars. And this is assuming the dollar stays around. This is assuming the dollar doesn't die, which of course there is a non-zero chance any given year that the dollar could hyperinflate. But I'm not being a fearmonger here. We're assuming the dollar doesn't die. We're assuming status quo continues. We're assuming zero new recessions, zero new wars, and zero new entitlement programs. We're assuming just over the last 40 years, the 7% rate only continues. In that case, we are still even then doubling the number of US dollars in existence. Now, if we add a 96% increase to the $860,000 price in 10 years' time, that is a $1,685,600 Bitcoin. Okay, we're looking at just under a $1.7 million Bitcoin. If this prediction from Blackrock becomes true and says that the world eventually has some sort of 2% allocation to Bitcoin, right? That's a 17x from today. But here's the real kicker, and here's the thing that I think really needs to be emphasized. Okay, 10 years ago, nobody was saying there was a 2% allocation to Bitcoin. Now people are. And so by the time 10 years passes, let's say we actually do hit that 2% global allocation target, and let's say that we actually only have a doubling of the US dollars in existence. That means that we're looking at somewhere around a $1.7 million Bitcoin. In that time, so much is going to change in the world that a 2% target is probably no longer going to be interpreted as a reasonable conservative amount. Probably a much higher percentage, like 5%, 8%, 12%, some other new percentage will be the new target because it's a constant moving target. Bitcoin keeps chasing the market cap of gold, but in the time it takes to get to that goal, the new goal is reached. The goal rises, the ceiling rises. It's the same thing with the percentage allocations, right? Bitcoin has been marching its way from 0% to 2% over the last 15 years, and it's probably going to take many years more. However, that target for percentage allocation keeps moving up as Bitcoin continues to approach that target. So maybe in 10 years, we're looking at something like a $1 to $2 million Bitcoin. I think easily maybe a $3 million Bitcoin if money printing gets significantly worse than historical trends, which I think is a non-zero chance. Then we could be looking at something significantly more because the allocation target is going to be increasing, right? So the long story short here is don't buy Bitcoin to get rich quick. Don't buy Bitcoin to increase your consumption. Buy Bitcoin to protect your purchasing power and reduce the probability that you're going to have your life savings debased. I've talked to so many people that have worked their whole lives and saved $50,000, $100,000, $500,000, a couple $1,000,000, and have it all in government paper or political currency, right? Like sovereign bonds, political currency, or other forms of investment that just aren't keeping up with inflation. And buying Bitcoin is a preservation of wealth that those political currency units are not going to be able to allow you. Now, I was speaking just a moment ago about dramatic changes in the world, about how that allocation target is going to increase. Here's just one example from today, literally today, of how all this change is racing towards us. So the United States is a very, very rich country, right? It's precisely why that we believe that we can just keep printing money forever, right? But if we actually zoom out here, give me 1 second to pull up this tab. My video recording software is giving me some difficulty here. But here in the United States, we have many states which are some of the largest economies in the world, right? The United States is not just the biggest economy in the world. Multiple states within the United States are some of the largest economies in the world, right? Texas is one of those states. Texas, if you had U.S. states being their own countries, Texas alone is the 8th largest economy in the world. Okay, and just this morning, right, just a couple hours before the time of recording, okay, a friend of mine, Dennis Porter at Satoshi Action Fund, shout out to you, Dennis, thanks for all the work that you're doing, has announced live on a Twitter live stream along with a couple senators that Texas has filed a bill to officially establish a quote-unquote strategic Bitcoin reserve. Okay, this is definitely a historical moment. Right now, I know a lot of people in the comments are complaining of asking, will it get passed? Will it be approved? It's not going to do anything. This is the announcement, blah, blah, blah. People are pretty negative when it comes to this. But the thing I want you to keep in mind is not saying this is a certainty. I'm not saying this is a certainty. And anyone complaining that, oh, this may not be a certainty, I think is missing the point. Okay. Yesterday, there was a 1 in 1,000 chance that Texas was going to pass a strategic Bitcoin bill within the next year or two. Today, because the bill has actually just been announced, okay, the odds of that being passed have increased by a factor of 10. Okay, if we've gone from a 1 in 1,000 chance to now a 1 in 100 chance, that's a tenfold increase in the probability that the 8th largest economy in the world, effectively, is going to be adopting a strategic Bitcoin reserve. Okay, now I'm actually more optimistic than that. I think the bill probably has more than a 1% chance of passing. It probably has like a 10% chance of passing, right? And so my point is, if you want to be negative on these kinds of announcements and say, oh, El Salvador adopted Bitcoin as legal tender, but they were a small country, so they don't count. Oh, MicroStrategy in 2020 adopted Bitcoin, but it's just some small, tiny, crappy, software company nobody knows about. Nobody knows who Michael Saylor is, right? It's like we can ignore and just, laugh at news stories when they're small and when they're new and when nothing's happened. But if you're thinking in a probabilistic scenario and you're looking at the long term, you understand, oh my goodness, Texas, like freaking Texas, saying that they want to have a strategic Bitcoin reserve, like even if there's a 90% chance they shoot the bill down the first day it reaches, for voting, right? Even if there's a 90% chance they shoot it down, okay, yesterday there was like no chance they were going to adopt it. And now there's actually some single digit or low double digit percentage that they're actually going to pass that bill. And if that's going to happen, that is going to greatly incentivize other states to follow suit and the US government. The US government is going to want to have a strategic Bitcoin reserve to compete with other nations like China or Russia, right? Putin himself has described how he might want to have Russian oil be exchanged in terms of Bitcoin, right? Because the Saudis have said something similar to a lesser degree. And so it's going to be a paramount strategy for America to stack some Bitcoin, just like how we stack some oil, we stack some gold, we stack some other important resources. We need to stack some digital power so that if other nations like the Saudis, like the Chinese, or like the Russians were to only be able to, or were only desiring to transact their oil or their other valuable natural resources in terms of Bitcoin, we need to have a Bitcoin stack. And likewise, the states are going to want to have their own strategic reserves because you don't want the federal government to be the only one with its own strategic reserve. If you are one of the U.S. states, you know that it's really important a balance of power between the states and between the federal government. For not just the federal government to have all the guns, but for the state to have some of the guns. Not just for the federal government to have all the voting power or the judicial power in the courts, but also the states to have their own individual power and their own individual sovereignty. So if Texas actually has a strategic Bitcoin bill passed next year in 2025, I think that greatly incentivizes other states to follow suit many of those states at which are large economies, even in the global scheme, as well as the federal government also adopting a Bitcoin reserve. It's just game theory. It's just network effect, right? It's like a magical game of musical chairs where you don't want to be first, but you definitely don't want to be last. El Salvador was first. They've been first for a few years now. We have a few other countries that are speculating or dabbling with considering this, right? And now we have one of the U.S. states seriously considering this, right? Pennsylvania, Texas, Florida, and Wyoming are some of the states the farthest ahead when it comes to Bitcoin. And I suspect that this is only going to continue. And over the next year, 2 years, 5 years, we're only going to see more states and more countries announce their intent to adopt Bitcoin as a strategic reserve. Even if their bills fail, even if they're not really popular with their constituents or voter base, again, think in terms of probabilities, not in absolutes. Even if there's a 90% chance this bill gets shut down, this is still a massive win for Bitcoin, a massive win to the narrative of Bitcoin. And if you don't understand that, I think that you need to maybe have a longer time horizon. So that's my case for why Bitcoin's going to go to, eventually Bitcoin's going to tens of millions of dollars or hundreds of millions. Like Bitcoin is just going to continue to appreciate indefinitely in terms of political currency and government paper that's trending to zero anyway, right? So obviously, in the long scheme of things, we're looking at a much higher Bitcoin valuation, but just from this kind of description alone, with only a 2% allocation, I think a reasonable allocation in the long-term future is going to be at least tenfold higher, right? And only the historical rate of dollar debasement, that still gets us to a return 17 times larger from today, right? So if you were to buy 100K of Bitcoin, that would turn into 1.7 million. Now, if you're somebody that's just starting and you're starting with 1K of Bitcoin, that would turn into $17,000 of funds in about 10 years or so, right? The point is, even if you're starting with a million, that would turn into 17 million, right? And the important thing is you're not taking the risk of our government rug pulling you. You're not taking the risk of these things. Yes, governments will be stacking Bitcoin at strategic levels, but they can't destroy the underlying asset, just like they can with the dollar. With bonds, returns are guaranteed in nominal terms because that guarantees that the real terms returns are inherently a loss, right? They guarantee the principal because they can dilute the real purchasing power. With Bitcoin, they can't guarantee either, which is why they have to have it. Bitcoin is money for enemies. Political currency is money for friends. And if you are no longer a friend, you get shut out, right? US and Russia are friends and use the currency of friends, the US dollar, until Russia is no longer a friend and we cut them off. This is exactly why Putin is having an interest in Bitcoin, because Putin himself has described that nobody can stop Bitcoin, and that is definitely correct. So you're not too late to Bitcoin. There was a dramatic amount of upside in front of us for an increasingly lower amount of risk, right? 10 years ago, Bitcoin was perceived as really high risk. 5 years ago, a little less risk. Today, even less risk. Okay, 10 years from today, Bitcoin is going to be multiple millions of dollars, and there will only be more upside in front of it. This is the incredible irony with Bitcoin. The higher it goes, the lower risk it becomes, and the higher the future potential upside, because the probability of survival has only increased dramatically. So hopefully this video has been of interest to you. Please subscribe if you have not done so already. Appreciate you watching this video, this short little news update. Again, I want to really emphasize, these videos are fun, but meeting people in person is even more fun. If you are in the Midwest, in Michigan, Indiana, maybe even in Illinois or Ohio, and you want to swing by awesome Bitcoin events celebrating Christmas, celebrating $100,000 Bitcoin, and celebrating fellowship and friends with your fellow internet Bitcoin nerds, December 14th in Ann Arbor, Michigan, which is coming up just 2 days from now. Today's December 12th. December 18th in Indianapolis, Indiana, and December 27th in Lansing, Michigan. Again, all events are free. Please text me which event you want to go to, and I'll be more than happy to email you that information. So text the phone number on your screen, your name and email, and I will email you information on how to attend these events, where to go, and details for it, right? Now, if you aren't going to make those events, or if you're not in the Midwest here in the United States, there are awesome international events coming up here. Colombia in January 2025. If you want to go to Colombia, I'm going to Colombia. There's going to be an awesome Bitcoin retreat down there. Jeff Booth's going to be there, George Gammon, Oliver Velez, BJ Dichter, and some secret surprise guests, which I can't announce yet. Costa Rica in February 2025, and Zion National Park in May of 2025, plus many, many more. If you want to learn more about all these events or others, text the phone number on your screen, your name and email, and what your specific interest is, and I'll be more than happy to let you know. Would love to have you come, would love to have you join us. Again, thank you for your time. Thanks for subscribing. And most importantly, understand your biggest risk to Bitcoin is not that you're too late. Your biggest risk is that, if anything, you are too early. Are you really ready for Bitcoin to be worth $1.7 million? Are you really ready for that? If you've got 20 Bitcoin, that means that your net worth would be what, $30 million or something like that? Let's see, what would that be? 20 million times 1.7 million, $34 million, right? Are you ready for that? If you've got 20 Bitcoin, you're going to probably have 30 to 40 million bucks in less than a decade. If you've got one Bitcoin, you're going to be a multimillionaire probably in a similar timeline, right? Even if you have a tenth of a Bitcoin, a hundredth of a Bitcoin, half a Bitcoin, 6 Bitcoin, 19 Bitcoin, it doesn't matter how much you have. What matters is you have to protect what you have. Take your custody seriously, take your tax planning seriously, and take your estate planning seriously, okay? Think in terms of probabilities. I think this is a probable path, which I've just outlined. However, there's no guarantee. There is a non-zero chance this does not take 10 years. There's a non-zero chance this is significantly faster than 10 years. And I think that's actually not the exciting scenario. I think that's the terrifying scenario, because most of us are not ready for a 10x, let alone a 20 or 30x in our net worth from today. So take these things seriously. There's information in the link in the description below. Text the phone number on the screen if you want to go to these Bitcoin events. Be more than happy to see you. Merry Christmas. I'll see you in the next video. Talk to you later. Thank you.